Okay, guys, so welcome to today's special webinar, which is an interview with Ryan Case from Kinesis. My name is Alejandro Zambrano. I'm the Chief Market Analyst with TradeCaptain.com. Some of you guys might know me from Daily FX, where I used to work for them in FXCM from 2009 up until 2016. Now, so Ryan here, he is head of sales and trading at Kinesis, and they're developing a new and exciting project, which is going to be based on blockchain. So he knows quite a bit about currencies and, digital currencies. And we thought that would be a great opportunity to invite him for an interview where we can talk a bit about uh, the top coins, really. In my day-to-day work here at Trade Captain, which is our news and research and education website, as you know, we produce technical analysis on the dollar and New Zealand dollar, but we also produce content on Ripple and Ethereum and Litecoin, as you can see here. It's actually very popular, these articles. And once in a while as well, we do updates on other markets like Bitcoin Cash, EOS, Stellar, Litecoin, Cardano, and IOTA. And sometimes even other things like Monero and Dash, which used to be very popular, all of these ones, but now fallen down the list. So this is the sort of most valued digital coins and or assets according to CoinMarketCap. So the idea is literally just invite Ryan in and see what he has what he knows about these markets, and if he could potentially help us to understand better in the next sort of half an hour what all of these, not all of them, but in general, what all of these different coins are all about, and what's the difference between Bitcoin and Ethereum and Ripple, and sort of provide you guys with a bit of an insight to these coins. Now, before we actually go ahead, so we're going to talk markets, and of course this is educational. That's the purpose of this webinar. And as with all sort of investment, not that we are going to talk about where to buy and where to sell, but with any sort of investment, it's important to understand that we could potentially lose all of our invested money. So let's begin, and we're going to begin with Ryan. How you doing, Ryan?
Hi, Alejandro. I'm very well, thanks. How are you doing? Thank you very much for having me today.
Yeah, good. Yeah, I'm good, thank you. And it's really nice to have you on, and thank you so much. I know you're a busy guy, so thanks for giving us some of your time. So I wanted to start. Can you please introduce yourself a bit so we know a little bit better what you were doing today and what you've done in the past?
Yeah, certainly. So I have worked across the commodity, currency, and cryptocurrency markets for pretty much my entire career, as well as having worked and currently working at a boutique hedge fund. So far this year, I'm actually working on my second ICO, which is a gold and silver based cryptocurrency. I am now based out in London, having spent my career across London, Hong Kong, and even Australia. And this is the sort of second multi-million-dollar ICO that I'm working on this year.
Okay, so what's the latest project you guys are working on right now?
So I'm currently head of sales and trading at a company called Kinesis. We've taken a bespoke fork of the Stellar blockchain and minted physical gold and silver onto that, with the intention being to create a stable cryptocurrency, one-to-one allocated, backed by allocated physical gold and silver. Allowing for people to pay for goods and services in a timely and efficient manner using this currency.
All right, all right. So this is obviously we'll talk about this more in depth, but it's an interesting starting point, right? So Stellar, which is currently valued at the number six of all the different digital assets here. Like, how come you work with Stellar? Like, what is it that makes Stellar that special?
A big factor in Stellar is the transaction time associated with it. You know, over 4,000 transactions per second is a big draw card that lured us towards this cryptocurrency, this blockchain. I mean, Stellar is really positioning itself as the future of banking. And that gets around some of the other issues that are presented by other blockchain technologies. For example, Ethereum was I've previously worked on a project based on the Ethereum network. The actual settlement time and transaction time associated with Ethereum meant that we were actually forced to do off-chain transactions and then write the results of those back onto the chain. So for this project, Stellar, and for the fast settlement of a confirmation of trades and transactions, Stellar presents great opportunities there.
So Stellar is it in essence like some sort of a system where people that have ideas like yours can quickly just get the project going to use their sort of network, or how would you
Yes,
describe Stellar?
well, one of, apart from the transaction, the time, the element with that, what we've done is created a bespoke fork of it, allowing us to actually charge a per transaction fee, which was necessary for our model. So we've created a bespoke fork to suit our needs, but it does have that ability for one to be able to adopt it and adapt it for specific needs.
Okay.
And
And
it's also so just in addition to that, it's not necessary. It's not mined in the same way as a Bitcoin type currency would be, and that suits our asset-backed element.
so for people that are looking at Stellar right now, so obviously a lot of people, well, some people, I think, unfortunately, a minority of people are looking to develop applications using sort of something like Stellar. The majority are looking at, for example, like, is this like sort of the value of Stellar, is it correct here at 30 cents per coin? Would one be able to argue that, if more and more people like yourself develop different functions on the Stellar network, that would increase the value of this coin? Would you say so?
The value of Stellar really does, it is tied to the use and the uptake of it, insofar as it's not something that is mined. It was the initial coins were actually created at inception, and then there is ongoing creation of them into the future. And that ties in with their vision of, a sort of an open network for people to access. So it really does tie into more people coming into, the price of Stellar itself there does tie into actually people coming in and demand for their currency.
Okay, that's interesting. Because obviously, if we compare, and I mean, I'm trying to keep this also very similar, very basic. I mean, but if we compare, for example, Stellar with Bitcoin, then I would argue that Bitcoin is primarily, it wants to replace the dollar, the euro, just become another world currency, whereas Stellar, in that perspective, is not trying to do that. Would you agree on that, or?
Yes, I mean Stellar is looking to be a non-profit platform, where it wants to integrate into the existing financial infrastructure. So it wants to be an infrastructure type product as opposed to a currency.
Yeah, I get it. Yeah, I understand. And the same holds true for Ethereum, right? I mean, that was the initial thought, as I understand it, to create a platform so people don't have to sort of develop everything around blockchain. They can just create their own applications and run it on the Ethereum network.
Yeah, certainly. But then you've subsequently seen things like EOS come out, which was a very exciting thing to see this year in terms of just the size of that capital raise. And that's because, on the back of what I was talking about with Ethereum earlier in terms of the transaction time, EOS is a new blockchain, faster, more scalable in terms of millions potentially of transactions per second.
So you would argue that Ethereum and EOS are like direct competitors for the same sort of people.
Yeah, potentially.
Mm. But obviously with EOS, I think they just launched their, I think they call it the mainnet, right? That just happened in June. So technically, I mean, I know they were literally I think it was the most successful ICO so far in terms of
By a
money
long way.
raised, I think. But no one, people are not necessarily using it. Is that true? Or I mean, it's not developed yet, the systems. Is that correct? Or
As far as I understand, yes. I mean, they've still got some work to do there, but really the way that they've gone about building it in terms of allowing people to build these decentralized apps, EOS wants to be the number one platform for doing that.
yeah. And for anybody that sort of is new to this, so these so smart contracts and dApps, they're in essence applications. They're software. Could be a contract, for example, where we say that we could have done a smart contract here, for example. Say, for example, that I would agree with Ryan that if he would do the interview, I would get him a drink, and then we would use something independent from him and me to sort of be able to verify that we actually did the interview. Then we could code that. So we could code that as a simple code, like if Ryan does this interview with Alex on July 25th, uh, if a GoToMeeting session was created and recorded, then that would qualify like he actually completed the task, and I would need to give him buy him a drink. That is sort of a system, a code, a contract you can create, and you can upload them on the Ethereum network, and then that runs by itself, and it would execute by itself. So as long as both parties agree exactly what needs to happen, it runs by itself, and that's really the purpose of these smart contracts. Now, Ripple then. So Ripple is obviously something very, very different, and it's not even decentralized like, say, Bitcoin and Ethereum. Uh, what can you tell us about that, about Ripple?
Ripple, Alejandro, is not one that I'm actually too familiar with. I haven't really been exposed to, despite its market cap being so significant, it's not one that I've really had too much day-to-day contact with or knowledge of, unfortunately.
Okay. All right. So, to my understanding, what they're trying to do is they're trying to create some sort of a new SWIFT system to transfer money from one country to another and do that efficiently for very, very low fees. Now, it's different to many of the other coins here because the actual network is run by the Ripple company, and they have in essence control, and there's no real direct insight to what's going on in that system, which makes it very, very different to the other systems like Bitcoin, which is open source. And how about Bitcoin Cash then, though? Do you have an opinion on that?
Well, I suppose, then just to quickly cover off on the Ripple element, that sounds like it does have some similarities with the Stellar consensus protocol, which follows that sort of maybe less decentralized element than Bitcoin, and that could be also somewhat analogous with, in terms of its target vertical. Another of the coins, the Cardano, there at number 8, which is also targeting to be able to run financial applications. So you know, there are certainly a number of these coins that are really targeting that financial space, and that could be something, you know, being signaled that there are a lot of people that are not happy with the current sort of way of operation of fiat currencies, and how these things have issues with transferring them around the world, the settlement times, the fees associated with such. And you know, just on that Cardano, you know, while we're on it, that's interesting there, in terms of how they've actually try to even encourage maybe more mainstream government type adoption, with a regulatory overlay in it, with you know, being able to combine some regulatory needs into their layers of technology.
But so Cardano, then how would you sort of, if you were a garden party, how would you like summarize that for someone that doesn't really understand too much about this? What's his purpose really? Or
So,
what's it for?
so you know, with a lot of these, you know, blockchain or cryptocurrencies, these blockchain architectures, they're really built as a kind of tech platform. You know, the same way as Stellar is a blockchain platform, or even EOS is a blockchain architecture for applications. You know, you could almost think of it as like Google being able to allow you to build applications, but decentralized applications. Cardano allows for financial applications that are used every day by orgs, governments, to transfer funds around the world. Cardano is a platform allowing for people and organizations and governments to do that, but adding a sort of regulatory layer on there, so that you know, if you want to be able to disclose data to regulators, this could be a platform of choice.
Okay, I see. And do you know if it's like a centralized, decentralized platform like many of the others, or?
Okay, so the Cardano is interesting. It's actually got a proof of stake um, element to it. So it does have and it uses this proof of stake approach to reach consensus, rather than a mining type of a mining approach to create and reach consensus. And this, you know, this gives uh, it looks at the various nodes to actually create that proof of stake.
So what does that actually mean in layman terms? Like,
Sure. I mean, I'm not necessarily a sort of technology orientated, but I do understand that it is different from the proof of work type approach used by some of the other cryptos.
yeah, okay,
And what it does is actually it also acts as a kind of interest bearing element. The more tokens that you actually have, the more you can actually earn over time by allowing, you know, your through this proof of stake approach.
yeah. So I think what you mean that if, in essence, if you have own more of that coin, then you have more rights to sort of help determine the future of it. Is that, would that be correct? So if you want to upgrade the protocol or something, and you own 51% of them, then obviously you will be able to approve or reject protocol updates.
Okay. Yep.
But is that what you mean, or?
No, I mean, if that's how my understanding is that, you know, the the proof of stake is actually allows you to receive more tokens over time, based on what you've actually got in your that you're holding at any time,
Okay.
in terms of an interest type of arrangement
Hmm.
from a basic level.
And okay, so what about IOTA? I remember in December I had a friend of mine that used to go to university with. He was super excited about IOTA, and I think at that time IOTA was like number fifth or number six in market cap, but obviously now at number nine. So everybody was super excited about it, but doesn't seem to be that any longer. What can you tell us about IOTA?
IOTA is actually one that personally quite interesting. I found it personally quite interesting. It provides an entire ecosystem based on a blockless blockchain. And what that means is it's a blockless distributed ledger. So there's no kind of chain structure or chain created um, when a transaction takes place. And it's for machine to machine transactions. So an iPhone, when it connects to Wi-Fi, um, it's scalable for billions of interconnected devices each and every time these interact with one another, and a payment is needed. Uh, as I understand it, one of the elements that maybe is um, contributing to its decline in market cap and price here is that it really needs that huge scalability for it to succeed, and that people in the past have complained that without enough participants, they're having to sort of resend transactions for these transactions to go through. And why is that? It's as I was mentioning earlier, it's got this sort of um, blockless blockchain. The sender of a transaction must actually um, do the work that was previously associated with mining. So it needs to actually complete two or verify two other transactions before that initial transaction is sent. So without that real scalability and that participation on this blockchain network, you're going to struggle to get its uptake. And obviously then you really also need to get in some really big partners to adopt this, for that uptake to happen.
So to summarize here, so if you want to send me some money, to verify that transaction, you also need to have verified two transactions in the past. Is that what you mean?
Yes, at time of me doing that,
Mm.
my role as the sender is to also verify two other transactions.
Okay, so it doesn't have to be okay, okay. And obviously, if nobody else is transacting, then you won't be able to accomplish those two transactions. So you won't
and
be able to send me money.
and then my money won't be able to be sent to you.
Oh, wow. Oh,
Yeah.
wow.
and
That's
and
interesting.
so
Yeah.
and so that gets around, and it is one that I really do find interesting. It gets around that kind of transaction type, um, transaction fee type thing. There's no mining associated in it.
Okay, okay. Yeah, because obviously for people that don't know, like a miner is literally somebody that has dedicated like their PC or some whole sort of hardware to mine and help with the transactions. But here, of course, if they don't have any miners, then it all depends on all the individual people. But it seems like a bit of a silly rule to do that, that you need to verify two transactions initially. Um, Maybe they should have done like maybe one or maybe none in the beginning. I'm not sure.
Yeah, potentially to get that kind of scalability and get those initial transactions going through.
Mm. But it's also interesting that you actually mentioned, because I didn't actually know about this. But what is interesting in general is that obviously a lot of people, like for example, like AOS, we talked about it, right? So they just launched in June 1st, I think it is, and the idea is that they will be able to get people to use their network, but a lot of, I mean, do you know, for example, some famous, except what is it, those CryptoKitties? Do you know any other good app that runs on Ethereum?
Oh no, I mean not off the top of my head. I mean there's a lot of projects. I mean, as I say, I was previously working at a very another ICO, and their network was built on
Yeah,
Ethereum. It has been very popular, especially amongst ICOs. You know,
yeah,
like for our ICO, the our Velocity token is built on Ethereum, but that's not really what is being transacted as a currency. You know,
mm,
that's where the scalability comes in by using something else, such as Stellar or these other blockchains that can do that far
yeah.
greater transaction speed.
No, you're right. You're right. Uh, because with Ethereum, I seen it online myself. Like, if you do want to create your own ICO, especially forward, there are people that offer you to create your own token on the back of Ethereum, and you just pay like 20% of your intake. Yeah. So as far as I know, it's a great platform for ICOs. But what is interesting is that in the case of IOTA, because nobody's actually using it, or there are people using it, but there's less people using it, and they have these challenges. My feeling is that some of the other platforms will at one point in a few years, maybe people come to the same realization, especially if sort of markets remain depressed as they are right now. And that is that if people don't actually use them, then they're not going to be providing any value to anybody, and that could cause them to decline. Like, what's your take on that?
Well, I mean, and that's it. You know, these things really need to create value via use. And without the use element, what are you doing? You're kind of just taking a buy and hold approach and hoping that the price will go up. Even this month so far, it certainly has been a good one. Since the start of July for Bitcoin. We're back through 8,000. We're starting to see Coinbase announce its institutional investor element there too. But overall, this year has been a bad one for a majority of the cryptos. Let's see if we can turn it around. But I think that has to be tied to um, the use case of these currencies too, and that's coming back to Kinesis. That's really what we've focused on is creating something that's usable and adding some elements such as our yields, which really stimulate velocity and encourage use of these coins in a practical real life manner.
So can you tell us more about the project? Well, what's actually that you guys are trying to solve?
So, we've looked at this from a number of angles. We've looked at the inherent volatility associated with a lot of cryptocurrencies. We've looked at the slow transaction speeds. We've looked at the high fixed costs associated with the transaction, and we've gone through a number of different iterations, or not iterations, a number of attached number of different elements to our cryptocurrency to get around this. So as I say, we've used a bespoke fork of the Stellar blockchain to ensure these high transaction speeds. We've associated a percentage of fee element so that we're not charging a high lump sum, such as something like Bitcoin. Every time a transaction goes through, we actually charge a small 0.45% transaction fee, which, as I'm, on my knowledge, I'm not sure that there is any other cryptocurrency out there that's charging a percentage-based fee. We've also attached it or based it one-to-one on physical gold and silver. So you've got that underlying physical asset, and we all come from the physical precious metal space. So just under 10 years ago, I was one of the first people at a company called Allocated Bullion Exchange, which is now fully operational, institutional gold and silver and platinum exchange with 7 vaults around the world, full storage, insurance, and audit. So we've got all the underlying precious metal. aspects. And then we've actually added a yield element to our coins. So you've got these multifaceted yields, which are really there to encourage people to send them, to spend them, to sell them, to get that velocity going, so people aren't not sort of necessarily just trying to hold these and look for that capital appreciation element. And we've also even attached a debit card via some partnerships we've got in place there, so that you can actually buy your coffee or pay your utility bills using a gold-based cryptocurrency.
So in essence, instead of like me walking around with a gold bar in my pocket and sort of chipping off some gold each time to buy a coffee, you do that. I will, with the help of you and that debit card, I can in essence buy my coffee and I exchange my gold for coffee, but with the help of your coin. Is that what's happening?
Exactly that. And you know what? If you decided actually that you wanted the underlying gold bar at some time in the future, you can even take withdrawal of that. But with our system, you've got access. We call it a new monetary system, and it's effectively taking your gold or taking your silver and allowing you to spend it in the same way as the currency it once was.
Yeah, because I mean, before the introduction of I mean, back in the old days, like people, the dollar used to be linked to gold, right?
Yeah.
And that is what provided a value until they delinked it, and you have issues with inflation. But
Yes.
how do you guys deal with, for example, like the volatility? Because like right now we're all talking about Bitcoin, but I remember in 2009, uh, gold was the Bitcoin of the time because gold prices went from, let's see if we can actually load them. Gold prices went from, I think, less than 1,000. No, sorry, not less than 1,000, but gold prices went from, like in the year 2000, gold prices were at the $271 per ounce, all the way up to pretty much almost 19, almost 2,000. So if gold goes up, will that affect my coins and vice versa?
Yes, it will. It will affect the value of your KAU, which is our gold coin, or our KAG silver coin. But if you look at that volatility relative to something like Bitcoin, it's fractional. It hasn't gone from 20,000 to 8,000 and sort of or 5,000 and then stayed down there, right? It's
Mm.
gone. Sure, it's gone from that sort of 1900 level, and back down to 1300 now, but sort of over the long run, and this is what gold does have. It's got that history. It's got that history behind it. It has been a stable source of a stable, secure source of value over the long run.
Okay. Yeah, that's definitely interesting. So, how does it work with the incentives that you guys or the ideas you have to trigger people to actually use the coin and not just buy and hold?
Well, we've actually attached several yields to our system, and a yield is a percentage share of the transaction fees that are gathered by our system every time a transaction takes place. So every time a coin leaves one of our Kinesis wallets and moves to another Kinesis wallet, we take a small 0.45 percentage fee. We have two what we call active yields, and now these active yields are for people that mint the Kinesis currency, so that is actually convert physical gold bars into the Kinesis currency, or silver bars into the Kinesis currency, or deposit sufficient funds to do that on a wholesale basis. Now that is a minter yield, and they're only eligible for that once the minter has sent or spent the underlying gold Kinesis currency or silver currency that they've created. So you're not eligible for this yield until you have used the currency. And the same thing with our depositor yield. So the first time you actually come into our system and deposit fiat currency to buy the coins, you still need to first spend them before you actually get access to that depositor yield.
Okay. All right.
And we're currently in the pre-sale of our velocity tokens, which is our sort of initial token offering. We are doing that, and these Kinesis velocity token holders get a 20% share of the fees from our ecosystem.
Okay. I understand. It's gonna be interesting to see and see how it develops because I know a lot of people. You have these gold bugs that literally they don't like the dollar, and I understand to some extent. Like there are some issues with it, with inflation primarily being one. I mean, even if you're based in the UK now, inflation was I think almost at 3% just a few months ago.
Yeah, and my bank account pays me 0.1% interest rate.
Yeah, no, definitely. And the lunches here in the city of London, what used to be an expensive lunch for like 7.50 is now like I think it's almost the average. So I think it will be interesting to see how this develops because I think you can definitely get some people that obviously want to avoid those issues by shifting into this.
Yeah, certainly. I mean, and if the our pre-sale so far has is anything to go by, we'll be very successful with this velocity token sale. Yeah, it is going very well so far, and we're all very happy and very proud and very excited of it.
So when is it actually going like fully live so I can have a debit card from you guys and actually just spend my money that way? When is that
Yep.
going to be implemented?
So, so that all goes live early next year. So we will start our public access to the Kinesis currencies uh, early next year, and alongside that, we'll be rolling out the Kinesis blockchain exchange, on which you can actually trade these currencies. So remember, we've come from the exchange industry, having built and currently operating the allocated bullion exchange. So we've got the Kinesis blockchain exchange, as well, providing liquidity for the Kinesis currencies. We've got the card, we've got the wallets, and we're really, I'd say, almost ahead of schedule on a lot of these things. Our e-wallet is currently in beta release. We've got a lot of the Kinesis currency elements in play as well. So we're all really happy with how things are progressing.
I understand. All right, cool. So I think we sort of had a nice little overview over sort of the top coins and also an introduction to the project you're working on. And if anybody's interested, you can just go to Kinesis.money to learn more about the project. I think the only thing we didn't touch upon was like the actual like sort of typical coins like Bitcoin. So we have Bitcoin, and we have Bitcoin Cash, and we have Litecoin, and then we have Monero and Dash. Those are supposed to be replacing maybe the dollar or they want to become like the new world currency. Whereas, as we talked about, Ethereum, Ripple, EOS, Stellar, and Cardano and IOTA, they're more of applications or networks where you can build your own applications or run different processes. So I think that was the only thing we didn't cover. Guys, if you have it, sorry, what did you want to say, Ryan?
No, I mean I didn't have any sort of thing to add. We've just seen that kind of evolution from Bitcoin into Bitcoin Cash to deal with some of the issues. The number of transactions that can be processed. In an attempt to kind of get around some of the issues that are faced currently by the sort of processing times and the fixed fees with Bitcoin.
You're right. You're right, 100%. I think even Litecoin was one of the first altcoins, and
It's technically built, as far as I understand it, it's very, very similar to the very, very original version of Bitcoin. Um, and then you have Bitcoin Cash, which has, I think, is have bigger block sizes, right?
Yeah, they increased that block size from 1 to 8.
So in essence, you can fit more transactions per block, and that should reduce the amount of transaction time, right?
Yeah, so and also that removes that segregated witness element. So removing certain parts of the transaction and freeing up more block space.
Can you tell us a bit more about segregated witness?
Oh, sure. No, as soon as you sort of dive into the specific techie details of these things, you got to remember I'm on a sales and a trading desk. I'm not on the IT element of it in too many details.
But what is it really like? How does it make things faster?
Oh, sure. I mean, it's just a code adjustment to be able to compete with the processing speeds that everyone is used to. Like if I'm using um, my current cards to process transactions. This is done within a matter of seconds. So by removing a number of these validations and increasing the block size, we can get these transactions done a lot quicker.
Yeah. All right. Something that is interesting though that I read about, I'm not 100% if it's certain, but obviously you had a lot of miners, and some miners just started to shift over to towards Bitcoin Cash, but the support is still higher for Bitcoin. But because there are not too many miners mining Bitcoin Cash, I heard that the transactions time are very similar at the end of the day.
Okay, interesting. Um, Yeah, that is interesting to know and to note. I think, also what is really going to affect a lot of the top 10 and even more as they sort of have a some correlation with one another is the institutional adoption of these various coins. As I mentioned at the start of our call, I certainly keep an eye on things like the article about Coinbase custody with its institutional investor element. It's a custodian solution for institutional investors um, now being available. Obviously, we see a lot of these headlines about Bitcoin exchange hacked or coin stolen, and that has a you know, so often has a quite a pronounced negative effect on the market. Well, it's good to see some positive developments, especially on the institutional side of things.
Yeah, definitely. I agree with that. Okay, so I think we're gonna wrap things up. But before we do that, one of those famous questions, like, where do you see Bitcoin by this time next year? The price of it.
Wow. I mean, we run a sort of office competition where, amongst us, we try and pick where it's going to be in the next 2 weeks, just to make sure we've all got eyes on the market. I can say that I finished stone last this week, so where I can't pick it 2 weeks out, so I've got no idea where it's going to be in a year. Um, it's got a lot of factors at play. I mean, as I say, let's see what the kind of institutional adoption looks like. Let's see what government regulation, if anything, comes in. There's just so many moving parts on these elements that who really knows. It's had a good July to date though.
Yeah, no, definitely. Okay, I think we're gonna wrap things up here. Guys, I wanna thank you so much for watching. And as well, if you obviously we're doing this live, but everybody that's gonna watch the recording as well, thanks so much for watching. Again, if you have any questions about Kinesis, then don't forget to go to Kinesis.money. And if you have want to know more about Trade Captain and sort of the content that we produce and want to follow us, then don't forget to follow us on Twitter at TradeCPT. And if you're interested in what I'm sharing, then check out my handle at AlexFX00. Ryan, do you have a handle?
No, I don't. No, I don't. I'm not on Twitter. But we do have a Kinesis Twitter account.
Okay. Did you reply on that?
Yes, we do. Yes, we do.
Okay, so actually, I just go here. It should be here, right?
Yep.
And the bottom here, there we go. So it's Kinesis.money.
Yeah, that's the one.
Awesome. Okay, Ryan, thanks so much for your time, and I hope you have a good day.
No, Alejandro, thank you very much for having me. It's been a pleasure, and I look forward to speaking with you again soon.
Yeah, definitely. All right. Thanks so much, guys. Thank you.
Thank you.